Richard Calhoun, real estate broker with Creekside Realty, serving the Silicon Valley consumers for the last 40 years. We're here today to talk about the real estate market and what's happened in the past week. Here is the first slide. We're looking at the supply and the demand. The supply is the blue line, the available inventory without an offer. And the reason I say without an offer is some people count properties that are in escrow but seek backup offers as available. A new buyer cannot come in and buy that property unless they're able to kick out the first buyer. So I do not count those. So the blue line down here is the total inventory that's available for a consumer to purchase today. And you can see that we're about 90% of the normal inventory. And this is for macro data. So this is Santa Clara County, San Mateo County, condos and townhouses, as well as single family homes, all in one big blender. The next line is the gray line. That's just the new inventory coming on in the marketplace. And you can see it's been just about normal. So how do we have the normal number of listings coming onto the market all the time, and we have below the normal number of market listings on the market? And that's because we're selling more homes than we normally have. Now, the red line is the demand, and you can see it's been running about 120% above where you'd expect it to be. For those that have been listing for any period of time, this had been about 135% of normal, and I have changed over to be more consistent using only one of the two MLSs that I have access to, so the data is more consistent. It should be the same across the different MLSs, but there's was a 15% drop basically in demand. So I believe this is more accurate representation of the real marketplace than what I was doing earlier in the year. At some point, I actually would like to find out why one MLS is saying we're selling 15% more homes. I should be able to dive in, pull up the MLS numbers and compare them one for one. I just haven't done that. I'm just starting to realize the magnitude of the discrepancies. Moving on now to DUI only, which is the supply-demand ratio expressed in days to sell the existing inventory. The blue line is the current data, and you can see the yellow line is the 5-year median. It tracks, but not really. If I really looked at this, basically starting back here somewhere around week 11, days of unsold inventory normally increases, which is a slowing down marketplace, and basically it stayed flat until we hit the perturbation because of the July 4th holiday. And now that we're past the July 4th holiday, we finally have two data points, this one right here last week and this week, that would tend to indicate that finally the market is starting to slow down a little bit. And I believe that is exactly what's happening. This is actually an interesting graph, and what every line is a different week. The purple line here is the most recent week. And basically, as you go up and to the right, the market's improving. And we had been improving as we came into the calendar year. The dotted lines here are the oldest lines, and the dashed lines, and then the solid lines. And then we had about 8, 10, 12 weeks of the market basically being stable, which is why all these lines are grouped together. And now all of a sudden, with the purple line, which is the current week, showing up on the bottom side through here and towards the bottom side, but compact here, and also towards the bottom side here, now the market's clearly slowing down. But this requires sale price. So this is data from 5 weeks ago. So the buyers have been feeling less need to overbid. Yes, they're still overbidding, 85% of the time. So it's an insane marketplace, but they are doing so a little bit less than they had been 6 weeks, 7 weeks, 8 weeks ago. So there are definitely indications that the market is starting to cool off. Now, when we look at sale price, we had been coming up in Santa Clara County about 0.75% a week. We hit a plateau of 24% in middle of June, 24.4, 24.1, 21.4, 20, 20. So we've hit the peak, which is basically, call it the month of June if you want. And then in the month of July, we've retracted a little bit to the point where are now back to the level we were at the beginning of June. So that's the market coming up, hitting the peak, coming back down a little bit on the downside. And again, this requires sale price. So this isn't what's happening in the marketplace now. This is what happened in the marketplace 5 weeks, over the last 5 weeks, but 5 weeks before that because the duration of close of escrow. So basically somewhere around 7.5 weeks ago, the market would have started slowing down. And then if you count back 1, maybe even 2 weeks, you're talking about 10 weeks ago. that's nice to see a little bit. Maybe we'll have a little saner market going forward. So that's the quick recap. I'll see if anyone's got questions before I go into the details. Now we'll look at the details. And right off the bat, I'm going to point out that I crossed these data points out. I changed the methodology in which I was doing it today to save myself time going forward. I don't trust these two numbers, and I don't understand why. These are the numbers that I've been tracking for a while. They've been in my spreadsheet. They haven't been on this chart, but they jumped out this week as not making sense. All the other data here does make sense. When I question the data, I don't want people to rely on it. I think the real number is closer to like 2930. I don't know where the 24.8 and the 24.4 came from. Yes, I know exactly where they came from. I just haven't dug into the data to verify it. I seriously question. Anyway, I feel comfortable with these numbers. So Santa Clara County single family homes, we now have a 24.9, call it 25 days of unsold inventory. That is clearly slowing down. That's why the jump up in the data point. But remember, 25 days is still a very strong marketplace. I consider 40 to 80 to be a balanced marketplace. Frequency of overbidding, I said 85%. It turns out to be 84.1% of the sellers are getting more than their asking price. And on average, they're getting essentially 110% of what they're asking. And that's for Santa Clara County single family homes. San Mateo County single family homes is very similar, 30 and a half days of unsold inventory. 77% of those sellers are getting more than they're asking for. And again, they're getting about 110% of over their asking price. Condos are a little less frequency of overbidding, closer to 70, 75%, and the magnitude of overbidding is around 105%. Condos tend to be a little more slow and steady, where single family really shoot off the starting line at the beginning of the year. And so it would not surprise me to start seeing the magnitude and the frequency of the single family homes dropping more and potentially dropping below the condos and townhouses. And I would expect the same thing with the DUI. I just don't expect it. I don't think it happened as quickly as this numbers would indicate, the ones that are crossed out. If these were up around 30, they had been up around 35, then it's staying constant. It's dropping a little bit, and the single family homes is what's really increasing or slowing down. Now what we're doing is a little bit of a breakdown, and these numbers here for the condos are sort of more of what I would expect at 28, 30, 33, 34, depending on exactly what you're talking about. I thought those were the 5-week numbers, so I would have expected 30 and 34. I'm not including the entire geographical area for San Mateo County, so I could expect some difference there. For example, I'm not including the beach condos and townhouses. But in Santa Clara County, I'm under the impression I'm counting everything, so I don't understand why the difference between this 30.4 and the 24 point whatever number it was on the previous slide. And that's why the crossouts on the previous slide. Active listings, if you go back to your notes and pull up last week's, you'll notice the last week doesn't agree. I'm, again, just changed the way I do it. Instead of doing a search to see how many are on the computer, which takes, extra time, which I really don't have much of to gather all the data, I rely on my spreadsheet data, which again is fairly consistent. There is some minor discrepancies, like do I include the Santa Cruz Mountain listings and things like that. In Santa Clara County single family homes, I include everything, but there was still a discrepancy of about 6. But when you're talking about 6 listings out of 800 on an active database, even though not that many people are active Saturday morning and Friday night, it is still possible that that's the kind of activity level we've had. So I'm not uncomfortable with these numbers. It's just I wanted to explain why there might be a difference when you go back and look at last week's. But this page is all internally consistent, which is what you need to do with statistics. You can't change your statistics between comparison points, which is why I went back and did it for last week as well. Anyway, you can see inventory's gone up by 50, which is a good thing, which is part of what's slowing the market down. Overall, we've gone from 1,150 to 1,210 properties to pick from in the single family homes. You can see the condos and townhouse markets has increased as well. Offers accepted, you're sitting here at 489. That's pretty strong. It's roughly 5 times the 1-week value. Again, this is roughly 5 times. They don't expect them to be exact, but it tells you the market's not really doing. And realistically, when you come down, here is the ratio. The 1-week days of unsold inventory is 25.5 for San Mateo County, 24.2 for Santa Clara. Then 5-week, which is the one, and the reason it's in red, this is the one that I would really look at, I still left this red from last week. I would really call this a tie. They're basically, yes, 24.8 is lower than 24.9, but is there really a difference? I don't think so. And you can see the condos and townhouses are at 30 and 35 are roughly where they have been. This is showing the three components graphically, and you can start seeing the increase right here where it's clearly going up. And again, remember, every week I look at it and I say, yeah, it looks like it's rolling over. That's just the nature of the weekly cycle. It looks like it's going to roll over every week, but then it just goes up, which is why the line is jaggedy. Even though we only meet once a week, the reason that there's so much jag in this line is I actually get 7 data points in between the time we last met and today. So every single day I get a new data point. This is the same data just stretched out. This is looking at the heat map, so you can see the different geographical areas and the days of unsold inventory. So I think the lowest is here in the sort of moderate affordable areas of Santa Clara County, Milpitas, North Valley, Berryessa, Santa Teresa, with 12 days of unsold inventory. That is an extremely fast marketplace. The slowest is in San Mateo County. The expensive areas right on the border, Menlo Park, Atherton, Portola Valley, Woodside, at basically 75 days of unsold inventory, which is still a respectable marketplace. Remember, I considered 40 to 80 to be that balanced marketplace. This is looking at the active listings. This is total active listings. You can see that you'd expect to have about, I don't know what number you want to call that, about 2,175 listings maybe. And we're somewhere down here around 1,875. So we're about 3%, 300 listings less than I would expect to have at this time of the year. But you can see we were at the beginning part of the year, we had above normal inventory. Then we hit normal inventory for a while. And then because the market didn't slow down, we now have less inventory than we expect. And this is the macro data of all types of property in both counties. This is looking at the number of new listings. Basically, it mirrors. I mean, yeah, there's differences between the blue and the yellow line, but for how volatile the real estate marketplace is from week to week with holidays coming on different weeks, it's basically a mirror image. So the number of sellers coming on the market is exactly what you'd expect to have happen. We still have excess demand, and that's what's showing up here. So you can see the blue line here has been consistently above the yellow line, and that's basically saying you have more demand than you normally would. Keep in mind, 2015 through 19, which make up the yellow line, were 5 great years. So we're having more demand than we have in the 5 great years that I'm comparing it to, which is significant. Then you look at the number of closings. Of course, if the number of offers accepted is above the typical number, you'd expect the closings to be above, and that's exactly what we have happening here. Frequency of overbidding, you can see this is basically in the stratosphere when you think about it. Anytime 75% of your sellers are getting more than their asking price, that's very significant. But notice here now, here's your apex where we're somewhere around 87% of the sellers getting more than their asking price. Last week we were about 85%, and this week we're down around 79%. So you can see if that trend continues, the market is clearly slowed down a little bit. This is looking at the frequency of overbidding in each of the 3 major counties. This is during the MLS on data share merge. And then here, this is one bad data point, and that's a bad data point for Santa Clara County. Now that I think I'm getting caught up, I will go back and clean those up. But generally, what you can see is Santa Clara County is the hottest marketplace. Now, long-term, before the pandemic and long-term historically, San Mateo County would have been the hotter area of overbidding. And you can see it was even the beginning part of 2020. But even before the pandemic, it became equal, and even below all before the pandemic, because the purple line is basically actually that pandemic line's moved. Pandemic line's back here. So it's still before the pandemic line. I guess when you add data point on the right-hand side, you got to remember to move your purple line. So what I'm pointing out is the fact that Santa Clara County is currently the hottest marketplace is fairly unusual long-term for this valley. This now is looking at the frequency of overbidding in the different areas. And I will point out this 93.6. I made a comment last week that if it was 93.6, I was going to dive into my data. But I dove into the data. Everything appears to be working. So the fact that we've now had 93.6% overbidding in Cupertino for 3 weeks in a row really does bother me, but it does appear to be accurate. I will do if it shows up next week, I'll dive into it deeper, because when you have, 150 properties or whatever the number is, to have the same decimal to, 3 significant figures just bothers me. The market just fluctuates too much for that to be happening. I know of no reason it's wrong, so I do trust it, but I'm a little gun shy because for those that have been with me for a while now, know that earlier this year I had locked it at, I think it was 95.6. So after about 3 weeks of 95.6, I investigated, found where it was locked. It's floating now, so I don't know why the difference. Here's your magnitude of overbidding, and just like frequency, it's coming down. It's only come down for 1 week, but the trend's the same. And just for clarification, this week is an extra week on the purple line. That separates 2020 from 2021, this being 2021. So the latter half of 2020, you have to subtract 1 week. So this week 53 is really week 52. And I did that to get visual separation so that the Excel would cause the break in the line so it wasn't connecting the dot. So subtract 1 week in 2020. I didn't want to drop off a week of data. It wouldn't really hurt. Then I'd have to add it back in. So that's why I just subtract 1 week. Then here is the heat map showing the different geographical areas where the market's the hottest, where the market's the coolest. Again, the range is from about 103.5%, which is pretty amazing when you're getting 3.5% more than you're asking on the biggest investment people are going to make. And the hottest area is probably down here in North San Mateo County area of 115%. I'm over skipping Foster City because that's this tiny little area right here, and there's very few homes, so that's really not significant. So North San Mateo County up here, and then Cupertino, Mountain View, Sunnyvale through here are the two that I would say are pretty much tied at 114.5 and 115. It's not exact, but it's pretty close between friends. Again, we've already talked about this graph. You can see the purple line is falling down. So now we've had a cooling a little bit. And basically what it's saying is even though the market's super hot, it's not as superheated as it was. So buyers are not going up quite as much as they had been going. And here you can see just the recent weeks. So out of the last 12 weeks, I would say the current week is probably the worst. You're a little bit lower down here for the dotted green month, which is hard for me to, it might be May 5th and May 8th of this year, but I would be willing to call the purple through here, right through here. Basically it's darn close to being the line lowest this way, which would make it the worst. So it's nothing to raise the flag about and say, hey, I'm concerned the market's going to crash, but it's showing that the market is cooling down a little bit. This is the pricing. Now the median price is what I did the color coding on. That's the middle number. The number to the left is the lowest 10 percentile. The number to the right is the highest percentile. So just picking on South County, basically there's $1 million range from 850,000 to 1,850,000, where 80% of the homes are, and the midpoint as far as the frequency is at 1.2. So you got $1 million range. A third of the way into that range is where half the transactions are occurring. So the 2/3 is less populated. There's more space between the next sale priced home and that kind of thing. But you can quickly determine what areas you can afford. Like, Saratoga, Las Gatos, the median price is $3.2 million. The cheapest is $2.1 million. So if your budget is in at least $2 million, the chance you're going to find something in Saratoga, Las Gatos is pretty slim. Now you got to be a little careful because you get into the real estate market areas versus the cities. And there are areas that are in the real estate area of Saratoga, such as over by Quito, where the homes are much smaller. They were built as summer cottages and the prices tend to be a little bit lower. So it depends on what the consumer is really looking for, but it gives you some idea. Now we're looking at the 5-week and we're comparing this to June. So this is going back to June 10th, and you can see how this month compared to other years and stuff. And this is as of June the 10th, so it's the most current. But also to sort of look forward a little bit, I'm now comparing the current data, July 24th, instead of comparing it to June, which I could have done on the previous slide. I'm comparing the ongoing month with July. So we're basically 3/5 of the way through my month of July, so you can compare it and see what's going on. Now, 11 days on the marketplace versus 27. Back in 2007, it was 21. That really isn't that significant. Where you want to look at what's selling. Now, if you look at 15 and 8 days, and you come back and you look at 19 and 11 days, days when sold inventory matches, that's the real key. That's the current pressure that buyers are going to be feeling. If you look at the sales per day at 34.8, I mean, you have to come back all the way to 2013 when we're coming out of the 2007-8 recession to have that kind of volume of sale. But long term, the valley's been slowing down, and you can see historically we've been selling 40 and 50 homes per day. So even 35 homes per day is nowhere near where we've been capable of selling in the past. This tells you the square footage and bedrooms and bath counts. And then if you jump down here at 84.1% of the people getting more than their asking price, even back in 2017, it was only 75% or 74%. The magnitude of overbidding is at 100, and I think that's 109.6% versus 105.5. So you can see we're in a lot of ways we're outperforming where we were in 2017. And with that, I'm finished. These are my URLs to join me. The root green URL is how you get to the archive on YouTube. Join me Saturday morning. You just add the 4-digit year code to the end of that root URL. So you add 2021 to get to the handout, which was posted, 25 slides. I tried to get it posted about 15 minutes early. I'm running a little bit late the last couple of weeks, and it's been getting out there about 10 or 5 minutes beforehand. I try to do that just in case someone wants to print it out. And you add the word handout and then the year, month, date code. So it would be the root URL handout 2021 0724 to get to today's slides. And to get to the specific episode archive, you add in just the year, month, date code to the end of the root URL, and it will take you to this specific recording. With that, I'll see if anyone's got any questions and answer those, and then see everybody next week if nobody has any. Seeing nobody with any questions, I'll see everybody next week. Thanks. Have a nice week, everybody. Take care.